The third quarter results were pretty good, significantly higher than the ones we got in the second quarter due to several facts. On the volume side, our activity in mortgages and consumer activity in general with individuals went up significantly compared with the previous quarter. That is not strange because in the previous quarter we had the lockdown. As a second idea, I will say digitalization remains pretty much at the same levels that the ones we saw in the previous quarter, what means that this is a significant change result of the pandemic. Levels of digital sales and the level of digital operate transactionality remains pretty high. This translates into higher revenues. Revenues in the quarter were significantly higher than in the second quarter, and this translated to the P&L. Costs control was good. Costs in real terms fell 5% compared with the previous years, mainly due to the good efficiency and productivity gains in Europe. Finally, on the capital side, we reached almost 12%. We are around 12% core equity tier 1 in the third quarter. That is at the top end of our target range that we established 1 year ago between 11 and 12%. As you know, in the second quarter, we were pretty active in interacting with the customers, in facilitating the financial needs of the customers, and we provide a significant amount of payment holidays to the customer, more than 100 billion. This quarter, many of those payment holidays expired, and the results are very, very good, much better than the ones we were expecting, and only 2% of those installments remain unpaid at the end of the quarter. That is a very good outcome. On top of that, we build a significant amount of provisions. The level of provisions in the balance sheet is in the region of 24 billion euros. That is a significant cushion to face future uncertainty. As a result of this, in the year, we were given guidance to the market of having a cost of risk of 1.4, 1.5 cost of risk. Now we think it's more in line with the 1.3%. Taking into account the starting position with a very good starting position from the business point of view, the business model is working, the diversification is working in our favor, and we have a pretty strong balance sheet. From this starting point, we think that we are in a very good position to continue to deliver to our customers, to provide the financial service they need with good quality. So we've been doing that during the pandemic, where we were able to lend around 1 billion a day, and we continue to do so once the pandemic goes away or start to reduce the effects on the economy. So with this scenario in mind, we think that we are in a good position to keep growing our revenues and our results in the coming quarters. So this year, that is a very special year, you should recognize that, we're going to be around 5 billion underlying profit that can be seen as a floor, a starting point to build on top of it.